Hello and welcome to the Simpler Futures free video for Wednesday, December 18th. This is David Starr. I'm filling in one more night for Raghee, and tonight we'll go ahead and give the same Elliott wave treatment to the S&P 500 that we did last night to crude oil. Now, I am looking at the cash S&P 500 here, not the futures. If I trade this, I'm going to go ahead and trade the futures, but I like looking at the cash market charts. As we talked about last night, right? Trend moves, and we're in a long-term uptrend from this 2009 low. Trend moves in an Elliott wave context are expected to unfold as a 1, 2, 3, 4, 5 wave move. Now, we can't know whether the count that I'm showing here is correct, just these large Roman numeral labels on here, or if it's going to be a different interpretation once this is done. All we know is that once this advance finally exhausts, that we should be able to attach labels 1 through 5 leading into the high. Now, if it is right, if this is a large degree wave 4 here last December, then once this move to the upside from that low completes, then we might be able to look further down. But what I want to focus on this evening is that idea is still premature, because we're not expecting anything to happen to the downside until this leg up from last December exhausts. And so if we drill in from this weekly chart into a daily chart and focus on two things. First, this move down into that low last December from last October's high, what we can see is this is one of those 3 wave moves to the downside. Those are the counter trend moves that we talk about. And that's one of the reasons why we expected to see this move continue back to a new all-time high, which we're at. But we expect more than that. We expect more than just getting back above this high from last October, which is something that was already registered months and months ago. But we expect that move to have a 5 wave trend structure, and it doesn't yet, right? So this is most likely our wave 1 up, and part of the reason this is our biggest pullback. Also remember, wave 1 is in the direction of trend. Internally, it should have its own 5 wave structure, and that we can count out reasonably to here. So this is a very good candidate for our wave 1 and our wave 2, and there is no wave 3, 4, or 5 yet. This is not even nearly complete as a wave 3 because it doesn't have all of that 5 wave structure in it. There needs to be at least one more pullback and leg up before we can reasonably view it as having all of the structure for a wave 3. So there's more to be done to the upside. Meanwhile, if that's just a complete wave 3, there still needs to be a pullback for wave 4 and another leg up for wave 5. So this creates a very compelling case for us to look to see the S&P 500 continue even higher. Now, there are some reasons to think that we could be at or near a short-term top. Remember, we need 4th waves and 5th waves up before this is done. So whether we're near a short-term top or not, we'll address some of those questions in the premium video when we get there, so we can dig in a little more detail. But what this tells us is whether those pullbacks come now or later, it's going to be a whole lot easier to buy when we get these 3 wave pullbacks that turn back up, that will eventually come, whether they come from nearby or from higher. Now, there are a few other scenarios that we've been considering and that we should look at and that we should talk about before we consider this topic closed. we've been considering some other possible patterns to the upside. One of them is a more obscure Elliott wave pattern called an ending diagonal. Now, even in this case, there's not enough structure to the upside to call this pattern complete. So there still would need to be a three-wave move down for wave 4 of an ending diagonal and another three-wave move to the upside. Now, in this case, we might get a bigger move back down. It would need to come back through the July high in order for this to be an ending diagonal, and that would lead to a bigger pullback before up. But in any case, the pullback would have that classic three-wave corrective structure. So we can stand by the idea that we talked about, that any three-wave corrective pullback is a buying opportunity. Getting back below that July high would invalidate the more traditional five-wave scenario that we looked at over here on this first chart. So if we were to do that, this scenario is out of the running, right, and leaves our best ongoing upward scenario as this ending diagonal. So the next thing that we need to add into our discussion is what becomes too far down for the ending diagonal. That will depend a little bit on where we turn down from. Is it from today's new all-time high, or is it from a little bit higher? The reason is wave 4 of an ending diagonal is not allowed to be longer than wave 2. So if we were to get below, say, 3,000 or so and just keep going, that's what we would need in order to start considering ideas that head further down and that we're not still in an ongoing bullish advance. But otherwise, so long as we stay above that 3,000 area, that's still about 200 points below us, we're going to look to the upside, and any three-wave pattern down, which starts to turn back up, will be an opportunity to look higher. We'll go ahead and try and dig into the shorter term structure and when we might get some of those pullbacks for buying in the premium video. But for now, again, I want to be bullish, but I want to be patient for picking my spots. That's the overall message. Hopefully, Raghee will be back with you tomorrow night. It's been great spending a day with you, and I will see some of you in a minute in the premium video. Take care.